Okay, weekly stock market part two. Where are we? Well, with the S&P, as I've mentioned, the monthly is still rising. So any dips that might happen because the weekly may fall would only be baby bears initially, which can be ignored because the monthly MACD is rising. It's as simple as that. You've seen it here. Now, you may get drawdowns like this, which are baby bears, because the monthly is rising, in which case you can monitor the depth and the duration, and then you know what to expect in a worst case scenario in a rising uptrend. Okay, simple as that. So at the moment, I'm happy to be investing. Now, look at this. Look at that gradient. Looks nice and happy, getting a bit overbought because in the past when it's gone there, it's run out of steam. So just be cautious whilst it is upwards, just be cautious a bit. NASDAQ, well, I've said it week in, week out, still got up there, so you'd have to look at that. Just beware of drawdown depth and durations. So drawdown danger is depth of fall and the duration till it breaks back to where it was. I own this and I'm happy to be back in it. Okay, so we think we're going to get a bit more of a lift up on this. Maybe that goes up 10%, I'll make 20% on that. Okay, I prefer high risk, so I'm happy with that. Others may not. I continue owning this for my son and for me, and it's been since January 2023, so it's been rather good to us. Now, top 10 S&P 500 stocks over the past month. Let's just see if any of them are worth getting into. Make sure we haven't missed anything that we should have. Now, whilst this has got a value growth income rating of 8, which is good, it meets my value growth income, it fails on being a bit overbought, so it's not for me. Okay, NVIDIA, the key issue is, if you didn't own it, would you buy it? Well, that's overbought, even though it meets our value growth income. So the only reason which you would buy it is if, for strategic reasons, you said, look, it's AI, I've just got to be in, all right? And if you're already in, then your exit is, if it drops X, sell Y, all right? HP, well, the problem here you've got is that looks good, but doesn't meet our value growth income criteria. So not one for me, but the momentum does look good, but I'm not just ever buying things purely on momentum, I'm afraid. Moderna, again, momentum looks good. So if you already own it because you bought it when it was on our list, then you continue holding it, of course, for 12 months, or if it drops 25% from the high since you bought it. But would you buy more now? No, because it doesn't meet value growth income. We don't trade our investments, so we'd hold for the whole 12 months. Deckers, 7, so meets, but overbought. Now, this would be fine if down here it was on a 7, 8, 9, or 10, because the momentum was not overbought. Overbought means in the top half, oversold means in the bottom half. Overbought means could fall. Okay, that's what it means. So not one for me, I'm afraid, even though recent performance has been good. We don't chase momentum. Vertex Pharmaceuticals, 7, so fine, but not one for me, because again, momentum, there's quite a few of these in the markets at the moment, so just be warned and be aware. Such are the markets. There's a lot of opportunities which look like opportunities, but they're actually traps, I fear. Now, you might as well hang on, Alpesh. What would stop this going up? 20% of the time, that does keep going up. That keeps going up. However, 80% of the time, it doesn't. Does that 20% make up for the other 80%? Maybe for you, I don't like that roller coaster ride, all those odds. Best Buy, momentum looks good, but doesn't meet value growth income. Teradyne, momentum looks good, doesn't meet value growth income, but I know some of you already own it from previous weeks, in which case you would continue to hold it because it hasn't hit our exit rules, which are 12 months or 25% drop. But would you buy more? No, because it doesn't meet value growth income. Okay, Nextera, sorry, got to join the program. Tyler, sorry. Costco, again, great one in the past for us, where we've even done double leverage on this one because the drawdowns are very low generally. Okay, so it's a classic one for leverage. However, overbought, in other words, on the monthly, too close to the upper stream, could pull back. I know it could go vertical like an NVIDIA. However, doesn't meet value growth income as either, but that's overbought. So sorry, it will come back in the future. It's not as if we can't ever buy it again. This one I'm only going to discuss with my clients, otherwise they get upset. Similarly with Amazon. Okay, similarly Microsoft clients only because they get upset, otherwise Meta as well. I've got some more stocks. Don't forget, I'm on YouTube and alpeshpatel.com/links. So where are we on Bank of America? Again, like I keep saying, the momentum is fine. However, not for me because it doesn't meet value growth income. Others do. And I'd rather, given the choice, go with those because I'm not unlimited by choice. I'm not limited, rather, by narrowness of choice. Netflix, but overbought. So if you already own it, I've been covering it for weeks, then you'd keep hold of it until it hits the exit, which is 12 months or 25% drop. But if you don't own it, you wouldn't buy it now because of the momentum. Similarly with Walmart. Brilliant, but again, you might say, what if it just keeps going up, Albert? Well, it might, but I don't like those odds. And remember, another thing is whenever you buy any stock, let's say you assume you did buy this, always look at a previous upward trend and look at the worst drawdown that it's had in that upward trend and the duration it took to break back to even, and assume it's going to happen as soon as you buy it. Coca-Cola, I continue holding. As you know, JP Morgan, I continue holding, but I won't buy more now because it's overbought and doesn't meet value growth income. Simple, yeah? You're getting grips with it. Tesla, should I talk about it? Should I not talk about it? Okay, not a special situation at the moment for us. It doesn't meet value growth income, but we'll keep an eye on it. MasterCard, as you know, I already exited, and anyway, the momentum's going in the wrong direction, so I'm glad I did, but I knew I would because the time was up on it. Great investments. Only Broadcom 7, but value growth income, whilst it's 7, the momentum is not right for me. Walt Disney, it's a baby bear because the weekly is falling, but the monthly is not. So ignore the baby bear. Don't forget, I'm on LinkedIn. So do connect with me there. People ask me, how do I know who you are? 2 people this week. How do I know who you are? How do I know it's not AI? How do I know it's not something else? I said, well, just follow me on LinkedIn because there's thousands of followers on there, and it'd be very difficult to be AI in front of all of those people, especially when many of them are executives of government offices, number 10, etc., etc. Okay, and please check out my campaign for 1 million, which is my campaign to teach 1 million people how to add an extra 1 million across their lifetimes into their pensions through better investing. Thanks to modern technology, you can reach 1 million people. Thanks to people's pensions, you can teach them to add 1 million across their lifetimes into those pensions. Thank you very much.